Joining us now is Madhu Kannan. He is the Chief Executive and MD of the Bombay Stock Exchange. Right, well, you know, I'm not going to talk to you about the market direction necessarily, but what about all this volatility? What are you making of it all?
Well, volatility in the market has gone up. If you look at the various metrics of volatility we have in the country. But one interesting thing about India is that we still have a very strong domestic demand base. Both from a consumption perspective, but also and there's a lot of effort right now being made to develop the domestic investor base as well, both retail and also institutional investor base, to get that pool of capital which is currently being deployed in gold, in real estate and bank deposits to start coming into the equity markets.
Yeah, so to do that, of course, you've got to probably have to launch a new business plan, new products. What are we talking about here, which are going to be retail investor friendly?
Well, I think the business model of exchanges in India are going to see a lot of change. I think, at least in our case, we're going to transform ourselves from being a platform which just offers trading in equities to more of financial transaction processing infrastructure. Because a country like India, which have got an increasingly huge amount of a middle class and new investors coming into the market, you've got to make the cost of access to these products as cheap as possible and as efficient as possible. And start launching out more and more new products than the plain vanilla products we have.
What are we talking about?
For example, we are launching in a big way an equity derivatives product next week, based on a benchmark index, which is the most followed index among the retail investors. There are two markets in the country. One is us, and the other one is the NSE, which is the Nifty, which is the other index. But the Sensex is an index which has actually got greater following in the retail parts of the country. So we are relaunching our equity derivative markets, focusing on the Sensex as a product, by also giving incentives to market makers as well as ordinary market participants to come in and participate and create the initial liquidity. So there's a lot of product innovation happening. India is the only emerging market where there is, to my knowledge, where there's clear competition from the same asset class between sort of exchanges. And we're looking at significant innovation in product and pricing. And the launch of liquidity enhancement schemes is very important.
I mean, you mentioned that there's a wall of liquidity out there sitting on the sidelines. So how confident are you that you can actually bring it in, given what we've seen with equity markets and where they've been going? And, you know, you're probably going to get a better return if you're in property or in gold.
I mean, the other challenge we have is with the interest rates where they are. I think we also have competition from the bank deposits.
Yes, yeah. I mean, so what is it, 8%, 9% the prevailing interest?
No, but you can actually, for a retail investor, you can get around 10.5%. So 10.5% of sort of secure sort of return, vis-a-vis a very volatile market on the equity side, creates a challenging situation for us, those that run in market infrastructure situations. But I think it's a long-term story. I mean, clearly, there's growth is there to stay. Growth is happening across the country. There's a huge demographic dividend. The other interesting trend is that more and more Indians, there's going to be a rebalancing of the allocation to equity and more equity-linked assets in the household balance sheet over the next 5-10 years. When that happens, we want to make sure people are more well-educated. They know the risks and returns of equity and the long-term return of equity. And that's sort of the game which we at the exchanges are trying to play. But short-term, I am concerned on how do we get the retail investors to come back into the market.
Yeah. Let's also just talk about consolidation. We've seen a wave of consolidation internationally speaking. What about you guys?
Well, the current law precludes any international exchange to have more than 5%.
I'm not just talking about international, you can do it nationally too.
And even nationally, there's a 15% cap on exchange. For example, we own 15% of an exchange, which is primarily in the currency and interest rate derivatives segment, called the United Stock Exchange. So the current law currently does not seem to allow a full consolidation among exchanges. And I think there's been a report which is sitting in front of the regulator. The regulator is going to come up with some more clarification on that issue. But from our perspective, the opportunity in India is so big, and if we can just tap that opportunity effectively, the upside is so significant than looking at sort of full-scale mergers. Having said that, if there's some opportunities where we can collaborate, where there's a win-win situation where people come in, which it may or may not involve some sort of infusion of equity to a limited level. I think we're going to be very open to it.
Very quickly, Madhu Kannan, looking at this, what about the pipeline for IPOs? Is that a solid one, or are you seeing many, or are people just avoiding the market right now given the volatility?
It's softened up. It's softened up. I think we are not going to be seeing, at least based on the numbers you're looking at, the size and volumes of the transaction that we saw last year. But we'll see. I mean, I think the next quarter will give us much more indication, but definitely things have softened up a little bit.
Madhu Kannan, thank you very much indeed. Bombay Stock Exchange CEO.